Hey everybody, welcome to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is a review of the recent Forex trading patterns, my top trading setup. So I'm going to look at last month, how price unfolded, go through some of the patterns that I trade and teach. Hopefully hindsight, look at what did unfold last month can help you with your trading this month. So tonight's webinar is a look back at last month and how things unfolded. What was the market structure unfolding, support and resistance, trend, patterns that unfolded that you could have possibly traded if you were in the know? It's not looking at what's happening today. That's tomorrow's webinar. All right, so move along. Now, if you're new to the webinars, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. And I'm a full-time trader. I've been trading now for more than 15 years in the Forex markets, mentoring for more than 10. If you want to contact me, my email is on screen, duncan.cooper@acy.com. Through the week, you can get me at our website, acy.com market news tab. That's where you'll catch my analysis. If you want to get me on YouTube, you'll get me at ACY Securities Australia. And my analysis is on there too. You can connect with me on Twitter and LinkedIn. And in our Telegram channel, the ACY Securities Live Interactive Trading feed, providing analysis in there through the week. Just contact Nathan Bray at acy.com if you want to get access. And his email is on the bottom there, but I'll put it in the chat momentarily. As well, if you want to get access to my chart layouts and templates, the ones that I use in my analysis and in the webinars, that kind of look like this on the screen here, just email or call Nathan. He will help you set that up. So you can follow along with how I'm trading. As well, next week, if you're an ACY client, an account holder, you can get access to the Inner Circle webinar Monday. I should alter that while I'm on the fly, because it's not accurate. But we got a webinar coming up. Thought I'd altered this, so I'll do it on the fly. There we go. Monday, the 6th of February. All right. So if you're an account holder and you want to join myself and Nathan, the purpose of the webinar is for account holders to come along and ask questions about their trading. And you can ask me anything you like about trading. We'll talk about charts, trades that you've been taking, anything you want. So you just need to contact Nathan and ask for an invitation. And we usually have 4 or 5 people there that can come along and talk and discuss between the two of us. And I actually learned something last time of how to do something in the platform. So it's always good fun. We're always learning something, whether it's me teaching somebody how to do something, or I actually worked out how you could create alerts in the MT4 platform or the MT5 platform and have it sent to your phone. I didn't know how you did that, but I do know how you do it now. So that's what I learned last time. So we do this once a month. So Monday, the 6th of February, that is 8 p.m. Sydney time. Just contact Nathan to get access. All right. I will just save my PowerPoint. I'm sure I updated that slide of the day, but it didn't seem to save. So there we go. All right, let's get into the charts and let's have a look at some of the pairs that I look through and trade and what happened last month. All right. Now, of course, we can't make money from what happened last month right now, but hopefully the market is moving in certain patterns, changing trend at support and resistance, high levels of support and resistance. It's doing the same thing all the time. So if you can start to see that historically, hopefully you can start to see it happening for foresight, and then you can make profit from it in your trading. All right, so let's start with the Aussie yen now. As I've been doing these over the last 2 months, the 79% pattern has been very prominent and been very prominent in the month of January. So it doesn't matter what pattern. I teach 4 patterns: the 79% retracement, the head and shoulder pattern, the double top pattern, and the range trade. Now, some of these patterns can all form together. Some of them don't really form in a month. It all depends what the price is doing. But at the moment, the 79% pattern is definitely very prominent. And it's one of the best patterns because it does offer you exceptional risk to reward. Okay, so with that being said, let's get into it. So the Aussie dollar, just want to give a general view of what's been happening over the month. So 1, 2, 3, these kind of last 4 candles of the month. And in the prior month, December, we got some form of support down here. So whilst the weekly trend is down here to a lower top to a lower bottom, maybe this is a long-term double bottom, or maybe it's some form of support at the moment before we might move down longer term. But in any event, being aware that support is here at the moment, we could move back up the range. So I'm just going to put a line in. So the new month, all right, that's where the new month started, just there. All right, now I've got a reference. It's that low. This was the start of the month as we're moving down here. So when we came down to that weekly level of support here and we had a nice move up, there was always possibly the expectation that we could come down for a retest of weekly support, and weekly support could hold. So I would be, having a fib drawn from that low up this way, looking for the possibility that a higher bottom could form here. Now, of course, it did. And the 79% levels here. So this is really a 79% trade, in that if you were looking to trade at the 79 level, stop below the low. It does trade through, pulls up short of support, and then does move up a little bit short of the 79% retracement for the profit target, but it would have been a very nice trade if you traded that pattern there. All right, so it's all about starting to hold at weekly structure down here, rally, 79% pullback, and of course, price moves up. Now, in this area, of course, you could have traded this just off the day chart. You put your entry at the 79% level, stop below the low, and you're waiting to see if that pattern runs to form towards the 127 extension. Now, getting in on the 4-hour chart, those that might know what my 4-hour trade entry mechanism is, then yes, you could have traded just at the 79% level, stop below low, but the 4-hour entry is you're waiting for a reversal down in this area, and the entry is a break of a candlestick high. So the break of the candlestick high comes in here, that blue candle high there. Breaking above that high was the 4-hour entry, stop goes below there, and that improves your risk to reward. And you can see that once we broke that candlestick high there, that gave a good entry, stop below here, moves up nicely into profit. Okay, now you may have gotten out as you saw price action stalling here, or you may have been in it longer, but in any event, there was a nice run up here that you could have taken a nice profit out of as we move back up towards challenging this high here. Okay, so that was the first 79% pattern that formed as we're starting to reverse up from weekly support. All right. And the point I want to make is as well, is I'm going to show you tonight, if we've got time, it all depends on time. I've got 1, 2, 3, 4, 5, 6, 7 pairs to go through, but you're going to see if you become very good at just trading one particular pattern, like a 79% pattern, you can just trade one pair, because the 79% pattern offered a number of times on the Aussie yen here as we go through. All right, so back to the day chart. So we obviously move up here. I might just get rid of that line at the moment so we don't have to think about what it means. Is we move up to a higher top. So if you drag your fib up, and then we pull back, and we come back to 79% once more here. And then we move up, obviously. Now we don't quite get up to the 127 extension. We fail at what is weekly resistance from this low here. Go to the weekly charts, that low here. All right, so we've been bouncing up from weekly support, and we've been rallying up this month to weekly resistance. So we're trading up from weekly support, potentially stopping at weekly resistance. All right. So back to the day chart. Cameron, you got a question. Do I prefer to enter on the 79% level first touch or the break of the 4-hour candle? It all depends of the environment at the time. What is there any news coming out? I prefer to trade the first contact. I prefer to trade the 4-hour chart 79% retracement rather than the daily because it's less risk. So if it's on the day chart, I will probably take the 4-hour entry, or might drop down to a 50-minute chart entry. But what I want to try and show tonight is that you don't have to be trading off the 50-minute chart to take your entries. You can be trading off the day chart and make good profit. You can be dropping down to the 4-hour chart, taking your entry there and making good profit, so that you don't have to be screen watching all the way through the day to try and get an entry. Okay, so of course here on the day chart, you don't have to screen watch here. You can have an entry waiting there to get in. So this next 79% level entry, which was pretty much the same as the last one, you can have an order sitting there. If it gets there, you're in. Stop below the low. That would have worked out perfectly, okay, as an entry point to move up into profit. On the 4-hour here, if you've got the time to watch the 4-hour chart, your 4-hour entry was here. All right. Break of that candle high is your entry, stop goes below the low, and that works out just as nicely as this one over here. So if you have the time to watch the 4-hour chart, that can give you an entry there, offers you less risk in terms of pips, better risk reward for the trade. Okay. So I would probably take the 4-hour entry over the daily entry personally, because I can get a better risk to reward. But we all can't be sitting in front of the computer through the day and trying to get in the best entry. So what I want to try and get across is you don't need to be on the 15-minute chart to try to get the best entry. These entries are fine. This risk here in terms of pips, get my crosshairs to work, is, you wouldn't be risking any more than 50 pips here. And just trading up to the high here, hang on, really need my fib up to that high there. All right, just trading up to the high. So I said 50 pip risk, trading up to the high is around about 340 pips. So that's a risk reward in excess of 1.6. Okay, so if you're risking 2%, that's like a 12% gain. You don't have to trade many times in a month if you're getting these 79% levels and just trading up to the high where it came from with a 4-hour entry style here. That, making 12% in a month on one trade. And it doesn't matter then if you have 1, 2, or 3 trades that lose. And Cameron's saying that's a funded challenge done in one trade. I'm not quite sure what a funded challenge is, but that's a good rate of return on your money. If you can make risk 2% and make a risk reward of 1 to 6, you only have to trade once a month, so being able to make, although for me, you would class that potentially as a swing trade. A swing trade for me, if it goes beyond the day, it's a swing trade, okay? We don't have to get into what a complicated explanation of what a swing trade is. If anything that's beyond the day for me is some form of a swing trade rather than a day trade. But there's 2 trades here that will potentially make you in excess of 10% per trade if you just traded a risk of 2% through this period, just trading that pattern, okay? All right, so now in terms of taking profit, I like to take profit at the 127 extension if we can get there, but in this particular pair, you have to be very cognizant of the fact that you're trading up here into a weekly resistance area, and you have to move beyond that level to get to the 127 extension. So we are able to set both trades up with good risk reward, but we don't have to get to the 127 extension to make a good profit. And it's unlikely maybe that you can get there when you've got resistance in the way. So you need to be cognizant of that. But so that's all good. All right, so That was the first part of the month, or first good 2/3 of the month for the Aussie yen. All right, so when price got up to that weekly resistance level, we've been having maybe a little bit of a change of what's going on. And in the webinars, I picked out that area. Now, from the weekly perspective, this is all structure. This is a downtrend on the weekly. That's a lower top to bottom. So we're having a bounce there on weekly support here. And we could be coming up to put in a lower top up here at the 62% level and this resistance level. So this is like, you know, this is a weekly downtrend. You should be looking for an opportunity where the lower top could form on the weekly chart to turn to down in line with the structure trend, which is down. Okay, so it stops at resistance. Is it going to form a lower top? We don't know yet, but over the last week and a half or so, the market has been contemplating that level for a turnaround. All right, so this was a good level to start to watch for a turnaround because you're at the 62% level of the weekly range, you're at weekly resistance. All right, so let's just delve into this area more closely and see what's been happening. All right, so the 4-hour chart. Now, it's not by any means a perfect head and shoulders. I wouldn't really class it as a head and shoulders, but I can see how this was a slightly higher top to that top. And this is the lower top here. It has a little bit of a look of a left shoulder, head, right shoulder. Okay, it's not textbook, but you're going to see this kind of formation happening, which I kind of class as some formation of a head and shoulders. But what I'll be looking at is when you see this double top forming here and you see once more that we fall back below that weekly resistance, you should be looking for a rally failure, and it'd be a 79% retracement up into that area. So you'd be drawing your fib from here down to the low where we rally from. So that's there. Let's drop it to the 1-hour chart so it's a little bit clear of what happened. Price went down, rallies back up to retest your weekly resistance level again. So this is now the third test. All right. And the 79% level overlaps with your resistance level. All right, so when I see that 79% overlap with the level that we've been failing at, that to me is just an obvious level to trade at because it's a 79% entry, stop above the high, and trading down to 127 extension where it gets to here, that's a risk reward of 1 to 4 at least. Okay, so if you're risking 2%, meeting that target, that's an 8% gain. So this is the beauty of the 79% pattern. Offers you great risk to reward. Trading here, stop above the high, risk 2%. If you take profits at the 127 extension, you're going to make at least 8% return when you got that risk reward in your favor. All right, now, of course, I am showing trades that work for you to learn from. I'm sure I could go through and find you some that didn't work. Well, for example, and just to prove the point that not all trades work, that's why you have to have a very good risk reward, is when we came up, let's just go back to the 4-hour chart. When we came up here and failed at this resistance level, the weekly level, and fell down, we did come up to retest, and we actually traded above the high there just. So if you traded this as a 79% trade, stop just above the high, there's a chance here, depending on how much you put your stop above the high, there's a chance there that you would have got stopped out. Right, so I don't want to give you the impression that all these work, because there's a 79% setup there that didn't work. So I've showed you 1 here, 2 here that works. This one here on the first retest doesn't work. Then the second one does work. And this is where psychology comes into it, because the first one didn't work, maybe then you don't take the next one because you're projecting the outcome of the last trade. All right, so we've got 1 win, 2 wins, 1 loss. This one wins, and then obviously we've been moving down. Now, there's that. I don't want to really talk about what's going on right now, but as we're here, here's a 4-hour range. As we're moving down from this resistance level, creating a downtrend on the 4-hour chart, lower top to lower bottom, there's another 79% level failure potentially for another move down, just focusing on the 79% entry technique, okay? All right, so there was 4 79% levels there that I could easily pick out. If you like a 79% level, this is a great chart to maybe doctor up yourself, take some screenshots, print them off, have them there so you can clearly get your head around, keep seeing that pattern. This pattern shows up all the time. And if I just wanted to trade one pattern, this would be the pattern that I would trade. All right, Aussie dollar. Now, at the moment, this is an uptrend. It's been an uptrend for the month of last month. We started round about here. All right. Now, there was a notable structure trade here. See this top here? I'm just going to get rid of that fib for the moment. And we'll get rid of that line. All right, so through the month, we broke above this high point here. All right, so just structure this. We come up, and yes, this looked quite negative at the time as it moves back down here. But we pull back to old resistance. Is it going to be new support? All right, and Cameron is saying quite often it pokes through the 79 by a few pips to 10 pips. Oh yeah, it doesn't always stop at the 79% level to the pip. Sometimes it works more like an area. So, you know, if I'm trading at the 79% level, I'll just put my order at the 79 level, and yes, it might go through against me a bit. Sometimes it can go through against me quite a bit and I can still be right. So I don't worry that it goes against me a little bit. But yes, it doesn't always just stop exactly at the level. It's like on that Aussie yen today. If this 79% one works, we won't know if it works or not until it runs out. That's traded, you know, probably 20 pips maybe through that level, stop above the high, but it hasn't stopped you out. All right, back to my other charts. Where are we? Aussie dollar. All right, so I want to focus on this area here. So this day was the day of the 19th. Just drop it down to the 4-hour chart. I want to go back to the day chart for one moment. You see how there's an area of support formed here. There's actually a bit of a low here, and there's a bit of a low here. So whilst my indicator doesn't form a significant low point there, there is a low point there, okay? And that low point is this low here. All right. There's an area of support here on the 4-hour chart that formed an area of 4-hour support here before moving up to this point and then pulling back to that level of daily broken resistance here. All right. So what I want to concentrate on is we had this movement up here. Then we have a pullback to support and then a move up. Now, you could just trade this as a support level. If you trade the 4-hour entry just as a reversal from that level, there is your entry just there. Break above that blue candle high. All right, stop below the low. As we can see, price moves up, so that would have worked out nicely. Now, the other thing I want to focus on, because I've been talking about the 79% level, is if you looked at this as a key focal area of support that was formed a base here of support to move up and through. So you can draw a fib from the starting point of that base. And lo and behold, the 79% level then is quite close to your level of support that you're watching. All right. So really for me, this is, you could be just trading it as a level of support reversal, or you can be trading as a 79% pullback to move up off support as well. Okay. And we can see that's moved up to the 127 extension level up here. Okay. So there's another 79%. It's a combination of a couple of things. You could class it just as a support trade or a 79% retracement. But it's always good as well when if you're trading a 79% retracement here in an uptrend, is that you have an overlap with support, because then you've got two things happening at the same level, which just stacks the odds in your favor that when you're trading at the level area here, you're going to get at least a profitable reaction from the level so that you can get your trade to break even and then see whether you can start to make profit from the move. All right. So it's always nice to have something extra at the 79% level when you're trading. All right. So there's a 79% level trade there. Entry area was around about the 19th of January. Now, on the bigger structure side, yesterday trend is up and it's actually still up at the moment. Is from the monthly perspective, we're in a downtrend and we've been moving up to 62% level of last year's trading range, and this low just here, 71.06, which is old monthly support, that low there. So let me just, so you can have a clear look at how all this comes together on the monthly. There's your monthly low. Broken support should be resistance, 62% level. This has moved down to a lower bottom. So at some point you should be expecting that maybe the monthly chart will offer you a lower top to form. Lower tops will often form at 62 level or 79% level, or at a clear level of broken support in a downtrend. Okay, so there's your clear level. All right, on the weekly, you have more resistance. We actually came up to touch that level, 71.37. So then that offers you the potential of a double top. On the weekly chart. Okay. Now, we don't know if that weekly chart double top is going to run down at the moment. It's too early to tell, but that's the structure that we're seeing here. Possible weekly double top. We're up monthly resistance, 62% fib. To the day chart, what's been happening, the day trend is still up, but we have had a 3-day reversal from that area. Now, you don't have to wait for the day trend to turn down if you're at a significant level where you think you can get a reversal. All right, and we are at a significant level of resistance and structure here. All you need to start to see is move it down to your 4-hour chart. Do you see a change? Do you see a pattern that could be forming? Now, I see a pattern. Does anybody see a pattern up here? Anybody? Anybody want to stick the neck out? All right, well, I see a head and shoulder pattern of some form. A little left shoulder here. We come down. We trade up. We put in as well. One of the clues that may be telling you that we're getting a reversal here is this very strong rejection candle that forms kind of the low point and the high point of that pattern. All right, so there's the left shoulder. There's the possible head. And of course, then price comes up and stops at that left shoulder. Now, I would be drawing a fib from just across that candle there. We might drop it down to a 1-hour chart so we can at least see things a little bit clearer on how price unfolded. And I can just then drag my fib across the range. All right, there's your 4-hour left shoulder, which is a double top on the 1-hour chart. Then we come up, hold pretty much exactly for three hours. All right, and so this is where you should be trading with a stop above the high. All right, that's how you trade the head and shoulders. Well, that's how I trade it anyway. Coming up to be opposite the left shoulder, it's great if it forms with the 79% level as well. And then, of course, we start to move down and it moves to the 127 extension. So your risk reward there was at least 1 to 4. If you're selling here, stop above the high, targeting 127 extension. If you left it open, of course, it's running much better or run much better because we've been rallying today. All right, so at the possible double top up here from the weekly perspective. We've had then on the 4-hour chart a little head and shoulder pattern form to wave at you to say, hey, we may be getting a change up there. All right, and of course we've sold off from that. Slightly saying to me it was moving up quite rapidly there. I would be thinking it might want to form a double top. Well, but often when we come up to a significant level, price does run up very strongly. All right, it's just the way that price action happens at these significant price points. A lot of the time price rushes up and then you're wondering to yourself, is this going to stop? All right, excuse me one moment. All right, I thought I was going to sneeze in. So often price can be running up very strongly to the level. It ran up very strongly here. I thought, is this going to break through here? Well, of course, it hasn't broken through there. But, it can still have time to break through there at the moment. But over the course of the last week or two, you don't have to trade it when it runs straight up into that level. You can then wait for your 4-hour chart to show you a pattern. And it did show you a pattern. And then, of course, it's been moving down. Now, are we going to get a long-term shift down from that level? We'll just have to wait and see. Today's webinar isn't about, well, what's happening right now. We might be moving up to retest that area, form a lower top. We can review that tomorrow. But we're just reviewing what has been happening for the month of January, right? So there was a nice little setup there that you could trade down from this potential double top forming. You could still be in that trade right now on the basis that a double top's forming, and you want to hold it for the long term. Depends what your mode of operation is, okay? So there was a nice trade on top of support here to move up, and then you trade it into weekly, monthly resistance, and then you should be looking for a reversal back down from that area. Okay, so there was an opportunity there. Let's now have a look at, are we going for time? Let's have a look at the euro yen, which in the most recent price action here isn't that friendly. All right, but it has been friendly at the earlier part of the month. So let's go to the day chart, and it is a bit range bound. All right, and I want to, look at what was happening before things were setting up as well. So some of the things that were setting up may have been setting up the month before, but as we get into the new month, so the new month started down here. All right, we came down to this area. Now this area is a monthly top. All right, this is why it's so important to look at your higher time frame charts, because often significant changes will occur from higher time frame support and resistance. So there's a monthly top that we came down to. We also came down to the monthly tops over here. This is the weekly chart. If I squash it in, it's here. That's your monthly. There's also a weekly low there already. It's already in previous months come down to that same level and acted as support on top of that low. So then don't be surprised that the same thing is going to happen again, because history just repeats, right? So it held there once earlier last year. Well, could it hold there again on another test? Well, clearly, yes, it did. All right. And through the course of this new month, we've obviously found support on that weekly, monthly level, and we traded back up to weekly broken support to be resistance up here. So we're pretty much trading between weekly support, weekly resistance, okay? All right, so at the start of the month, we come down here. Now, let's say, at the start of the month, we didn't know what was happening down here, and this was pretty aggressive. All right, but then, in the previous month, This is that weekly level of resistance. It was resistance here, okay? We come down to weekly support. This should be very obvious to expect maybe that this could be once more, all right, resistance if we got back up there. Andy, you're asking me what the dotted line levels are. They pivots? This is just a support and resistance indicator that signifies to me what are the important highs and lows on the time frame. Okay, they're not pivot points. All right. So when we come up to here to trade up to test once more weekly resistance, we failed there before. We could well fail there again. All right. You need to be looking at that level for reversal. It's just weekly structure that we failed at once, will we fail at it again and create some form of a range. Now, of course, what you could have been looking at a number of ways of trading this run up. If you thought, you could have maybe thought that we're going to have a bounce here to the 79% level to trade down. If you traded there, stop above the high, that would have worked as some form of pattern to trade. All right, but let's say we weren't looking at it that way. We were just simply looking at this level of resistance. If you drop it down to your 4-hour chart, well, from a day chart perspective, you could just trade the candlestick break of the candlestick low here to trade back down to support, stop above the high as an entry style. On the 4-hour, you have a 4-hour entry. Just watching your 4-hour chart coming up to this level, you're waiting for a candlestick low to break to the downside, that low just there. Stop above the high, or you can put your stop above this high here. Whichever one you do works just fine. And this trades down. Doesn't quite get back down to weekly support. All right. But you may have been targeting weekly support because you may have thought this was in a range. All right. So obviously I needed to manage your trade as you got to the lighter end of the range. But hopefully you can see there, the key thing to be watching for is we're moving back up to weekly resistance. Is it going to hold there and is it going to fail? All right. Then we move back down. Now you could have been looking on the day charts for this to come down to support. Now it doesn't. And the reason why I would have maybe thought this could come down to support was that it was a fractionally lower top to there. So you may have thought that price might come down to test this area or maybe come down to a lower bottom. Now, of course, it doesn't. And the market starts to show to you on the 4-hour chart that it doesn't want to do that. All right. The other thing that you could start to monitor, when you start to see this holding here, you could draw a fib across this range. You may start to think we're going to put in a higher bottom and you could start to watch the 79% area here. But moving down to the 4-hour chart, yes, over time, we come up here, we fall back down. You may be starting to think, okay, we're getting support in this 79% region and we're going to move up towards the 127 extension. That's what I started to think about. Now, of course, that never happened through the month, but there still was an opportunity. You could have traded at the 79% level here, stop below that low down here, or stop below this low here when price was here. That moved up into profits before moving back down. If you didn't do anything and you had your stop underneath here, of course, you would have been stopped out. All right, so through this period, we're getting some form of support around that 79% level. If you traded it here, stop below the low, you just may be sitting on the trade waiting to see, is this going to move back up and be profitable for me? All right. Now, what does start to happen is it just starts to form structure on the 4-hour chart. It starts to form a base here. Now, what does happen in this area is you kind of get a triple bottom forming. When this candle here traded below, but then closed back above support and support, there's more support here as well. All right. See how I didn't get down to that 4-hour level? False broke that level and that level. once we broke that candlestick high there, there's your 4-hour entry. That was an entry to buy here, stop below the low, because the market was telling you it couldn't hold and move below this area. And if you're cognizant of the idea that this could be a 79% retracement forming a base, then there was your entry, trade up. Now, we couldn't take out the high, and of course, we've been going sideways ever since. Once you start to see this going sideways, maybe that is a very clear sign that we're not going to continue up, and you need to be, looking at how you can lock in your profit and get out of the trade. All right, so it's not the most perfect 79% because it never truly made a target, but there was definitely opportunities here in this area to start to think about. If I'm seeing support form, if I'm seeing structure form at 79% retracement, I need to be looking for a move up, okay? And you're going to see this kind of situation happening all the time. You just need to start to, does it legislate with you on what is going on? Now, I don't know what's happening on this pair too much, but what I could say is I could take the same kind of theory at the moment, the opposite way now. Where's price failing now? Let's say price can't move through here. If it can't move through here, it's potentially moving back down here. Well, there's your 79% level at the moment. See all these 4-hour rallies, they're all getting capped here. It's got capped there today. So maybe now it's failing at 79% level of this high to low range to move back down this way. All right. So we're definitely now seeing structure, more downtrendish structure forming at that 79% level to move potentially down. Now, do I like this price action at the moment? Not necessarily. I probably prefer to go and look at a different pair at the moment. But if I'm looking at the 79% level, is it telling me anything? Yes, it is. It's telling me the potential that area there is holding as resistance for maybe a move down. All right. And if you're trading at the 79% level here, stop above the high to maybe target a long-term move down. Targeting, if you just targeted support there, the risk to reward there is 1 to 3. All right. You always, try to structure your trade so you've always got a risk to reward of at least 1 to 3. This is how you can do it all the time. You just wait for these situations to form on the chart. Selling there, stop above the high, taking profit at the low is a risk reward of 1 to 3. All right. These are the trade setups that you need to structure so that if you have 2 or 3 losing trades, then you have a winner that clears up those losing trades. All right. And this is how you need to do it. All right. Let's move on to, how's my time going? Got another probably 10 minutes to go. Just looking at my list. We'll have a look at the euro dollar. I really just want to look at what price has been doing over the last week. All right, because I don't know whether we're failing up here, but let's see what's going on. And Edwin, I can't see my 10D list because it's gone blank, but I think you're on there. I think you were telling me that you were looking at this 108.79 level. So let's just go through from the higher time frame perspective. I'll just take some of these lines off that. So let's just have a look at the monthly perspective. All right, just in terms of support or resistance. Where are we at the moment? Okay, now what I want you to focus on, this is going to be a lesson on just support or resistance. This is resistance, a level that was support, is the strength of a support level or resistance level will generally be defined. It can just be strong by the fact that it just comes up to a recent level of support or resistance and price holds. But the thing that's giving this a tough time to move higher at the moment is when you look back over many, many months here, see our support here. Now, I know we had a lower low here, but look at these months where it was rejecting to move higher. So at that point, that was a very strong support level, which was, back in time, further support here, further support there, further support here, further, it was support there, became resistance. I did operate around here a little bit, it wasn't exact, but you can see how that level is being used. So that level really is approximately the 10900 level. And the line level that I'm using from that low there is at 108.79. But if you can see a level that's been used on the monthly chart time and time again, it's been strong support for a long time. So of course it was strong support here because that's really where the move initiated to move up to there. All right. So think about this area here. This is where a whole bunch of trades were initiated by large traders to move this up long term to this area here. Then we broke below there. So lots of traders then maybe switched their positions to move it through this area of strong support down to that low. So that means then that there's a lot of selling going on here to break through this area to move down to there. So this is why this is becoming a very sticky area now of resistance, because the fact that it's been used before. All right, so as well, what I've been looking at is this is the yearly range. We're in between the 62 and 79% level. We're not in an exact fib, but it's worth noting that we're in an area where a top can form. But more importantly, it's this resistance level that's the key thing. All right, let's drop down now. So we have had a week down. Weekly trend is up here though, and the day trend is up. We are on the 4-hour chart though up here, starting to see a little bit of a reversal. Time will tell though if we get a change in trend, because we could blow straight through there over the next couple of trading days. But in anticipation of the FMC data coming out and the Eurozone data coming out, as we've been moving to the end of the month, maybe people have been covering their long positions. We've started to see some selling pressure in this area. And for a couple of weeks now, this trading area here for 1 week couldn't really get above that level. We got above a little bit last week, but on Monday we rejected the level. And on the 4-hour chart, trying to guess as to whether we're changing trend up here or not. This 4-hour area here is a little bit higgledy-piggledy, but what I do see is that we false break this top. We move down. Now I know price breaks above this top here, but the fact that we're at a significant resistance level, to me, I will be drawing my fib from there to that movement down, and then watching what price does on a cycle back up. And lo and behold, even though that's a little higher top to there, you see a 79% level. Then it closes down and it's telling you it doesn't like it up there. There's your 4-hour entry, and we move down. All right, now at the moment, we can talk about what price is doing right now. Are we moving back up once more? Just want to highlight this area. All right, so we've got resistance here, this high of resistance there, just showing a resistance area there, but this high here could be a left shoulder. That could be a head. See how we've almost hit the 79% level again. And, are we going to form a little head and shoulder pattern there, as we continue to keep holding at that monthly level of resistance? Now, we could move through, but are we changing trend up there at that monthly level? Now, Slav, you're asking me. So you say, but now it doesn't have all that structure it had when it was testing this resistance support level. It's just come up to it. Could you do a few testing handles before this decisive move? Or so you said could do a few testing. Yeah, I mean, it could test this area. Well, it has been testing the area on the 4-hour chart here. You can see it's tried to move through, then it's fallen below. You see this area here. This area here for that week was being held at that monthly level. See, so rejected here, straight back down. It has been trying to move above this area, but see how it keeps moving back below, moving back below, moving, you know, we had a nice move back below this week. Definitely there's a fight going on here at that level. And you just have to decide, do you like the level? What side of the fence do you want to take the battle on? Now, what I'm seeing is that upward movements at the moment are getting rejected, and they're getting rejected at the 79% levels. Edwin, you're telling me you're looking at 109.13. I mean, there's a high there. You could have your fib drawn across that range there. I did post in a Telegram earlier this week about the 10900 level. But yeah, you could be looking up here, very much like what we had on the pound dollar last week. There's a 4-hour area of resistance up here that you could be monitoring. Now, of course, we've got the FOMC in the morning. We've got the Eurozone interest rate decision tomorrow. Who knows where price will be when and where it moves to. But at the moment, we've got these kind of 4-hour area up here, covering that high, and that high. That area, we could see a spike up into this area. You know, if price moves into that area over the news events, doesn't matter if it trades above that high. But what matters when you get a 4-hour close is, let's say we trade up through here, but do you see a 4-hour close that's back below there? All right. That's the thing you want to see, is do you see a candle like this form? If we run up through there when we get the news items coming out, does it then give you a negative close? Do we start to close back below these tops? Because if it does, you know, and especially if we start to trade back below, you know, 10900, it's telling you that it can't exist at the moment above 10900. It can trade above there for a while, but it can't exist above 10900. So whilst it's doing that, this could be starting to get ready to move down. I've discussed this imbalance down here before. This was when we had the job figures out in early January, and I think it was poor. Let's just go to it was ISM services PMI data. We had the job figures come out, and the ISM services PMI data come out an hour and a half later at the start of the month. And we've, you know, been up for the month ever since, but there's a significant imbalance back here. So, you know, and for the last 2 weeks, we've only been trading in around about 120 pips of range. So, you know, we may be seeing a change up there. We're definitely seeing 79% retracements and failures up there at the moment, like I've been showing on the other pairs through the course of last month. So don't be surprised. You know, we're seeing what I would say a small 79 there. That's the larger range at the moment that we have. Don't be surprised to see a 79% failure here to move down. All right, we'll just have to wait and see. Wait and see when the dust settles, what starts to form from the FOMC in the Eurozone as we move into a new month. Okay. All right. So, you know, as I said, the 79% level, I've been combining it there with a number of different patterns through the different time frames. Offers great risk to reward. Definitely want to put it into your arsenal, don't you? Or I would. I'm using it all the time. All right. So we'll see. You know, we've got another new month coming. We'll have to get past the data figures for the week. We've got, you know, if you're not aware, we've got The US interest rate decision in the morning, these are Queensland time, 5 o'clock. Expecting a 25 basis point rise. UK interest rate decision, 10 p.m. tomorrow evening, expecting 50 basis point rise. Eurozone interest rate decision, expecting a 50 basis point rise. ECB press conference. Friday, we got the job figures. So all these dangerous items coming out. So we might have to wait a few days to get past there to see what starts to form. So Harish is saying 50 basis points possible. Well, it's possible. Anything's possible. Anything's possible. The market's probably factoring in 25. But you know, if they come out in the morning with 50, then the euro dollar is going to drop in it. If the market's been factoring in 25 and we get 50, US dollar is going to rise. And then especially if Powell says something very positive about, okay, you know, we need to maybe keep chugging along at 50 basis point rates, and then we might have to chuck another 75 in, then the US dollar is going to move up. So who knows what's going to happen? We'll just have to wait and see what happens. And yes, if that happens, the indices will fall. So indices are poised very precariously at the moment because let me get my S&P 500. There you go, your monthly chart. We're underneath here, that old level of support. There's a 79% level there that we've moved up just fraction short of. So we've moved down, fraction short, holding underneath monthly resistance. I don't know, is that forming a double top there to move down? It's a very nice level for failure, for sure. The market obviously knows the importance of that level, because you see here where we came up and rejected. At the moment we're a fraction short of forming a triple top there. So the market clearly doesn't want to price in anything above there at the moment. It's pricing in that we may be holding there to move down. So or we can wait and see what these central bankers bring over the next couple of days, and we can go from there. All right, so we're just getting set for a new month. And hopefully you could see there from what I went through on the Aussie yen, that these trades aren't setting up every day. You're just waiting for the patterns to form over a week or 2 weeks. All right, so it doesn't matter if we can't trade over the next 2 or 3 days. We're looking for a nice setup of a pattern that really means something to us to dictate where the next significant move is going to, you know, move from and towards. All right. All right, everybody. So it's always good to review the previous month. Can you learn something from the previous month that you can move forward into the next month with? Okay. All right. Any final questions before we wrap it up for the evening? Slavy saying, I'm planning to stay up during the news. I am going to wake up at 5 in the morning just to see what goes on. I do have a couple of positions, so I will be up to see what goes on. Hopefully it doesn't go too berserk. I'm hoping that the US dollar may be positive from the outcome. That would help me, but we will see. All right. All right, everybody. So, you know, manage your risk. It's a high risk environment over the next 2 or 3 days. So you don't have to be in. All right. If you are in, try to manage the risk on your trades effectively. It's probably going to be fireworks over the next 2 or 3 days. So anything can happen. So you know, I was at the forethought that it's better not to make any money than to lose money, you know, when it's a high risk environment. So let the dust settle, look for a nice clear pattern, and then off you go. All right, so if you've got the time, tomorrow I have live market analysis coming up, 8 p.m. Sydney time. We can review what the FOMC brought, and see what's setting up for the pound and the euro as we move into their interest rate decisions tomorrow. Okay. All right, I'll call it a day there. Thanks very much, everybody. Have a great evening or day wherever you are. Look forward to seeing you next time.